What's up, everybody? So episode 52. First, thank you for joining me today. Real quick, I'm going to tell you about other episodes you should watch if you want to improve your trading skills. Episode 3, options. Episode 8, good episode. Episode 14, you're in a shitty stock. You're down 30, 40, 50%. You don't know what to do. Watch episode 14. You want to average down with options? I'm going to explain it today, but episode 37 is good. Episode 42, I teach you about max value on my spreadsheet, all right? If you're here to learn, please, and you found my video somehow, probably YouTube suggested it, spend the time. Spend 5 hours. Take notes. You're going to improve your skills. The light bulb is going to go off. Now, understand, everything that I do is organic. Everything I do, I don't think it can be replicated because I go live. I do this live every day. Okay. I don't have a script that I talk about, and I talk about everybody's stock, not just mine. You bring up a stock, you bring up a position, a question, I answer it. That's what half of this stream is about. Okay. So what do I teach? I teach rules. I teach lessons. I change the way you think and analyze the market. I have people that are like newbies, 5 months in, all the way to 15 years. And I'm going to show you a good diversification of who follows me and who's part of the platform. Now, why do I only charge $3.49? Because I want everybody to try it out. It's proof. I know it works. So if you try it, you're going to stick with me. The community is growing. We have over 1,100 people now. I don't know, trust yourself. Take the $3.49 challenge, So my rules, my lessons, it's all on the website. I'm going to explain it today, though. Today's is going to be about how to properly buy options and then average down so you don't really crush your account, because if you don't do it properly, you will blow up your account. It only takes one bad trade to blow up your account. So please stay with me. We might go a little over today. I'm going to give you this full lesson, and then we're going to go into other things. Now, please like the video. All right. Everything's algorithms that YouTube does. So everything we do is organic. So please like the video. I'm going to talk about the lesson first, and then I'm going to go back to what I might have purchased today and tell you some options positions for a longer term. Okay, so here's the lesson. It's all about options. So first, when we buy an option, all right, it's something we're looking at. We don't just jump right in. So we're looking at whatever option position is, and we're knowing that we want to buy it on sale. Meaning, I'll give an example. Tiger options, right? Tiger got pretty beat up today. It went down 10%. Now we know that Tiger on a bad day can go down 6, 8, 10%. Okay. I'm a fool. I bought in a little too early with that one. But what happens is on good days where there's inflow, okay, and we saw it today with SRNE, Sorrentino Therapeutic. I talked about it for 2 straight days, all right? I talked about it on Tuesday, on Wednesday. We are now Thursday. That popped today. I exit out of my position. I leave no bag holders. Unlike other gurus who are like, when do I get out? I tell you, I secured profit. That's it. I'm done. Move on to the next trade. Okay, so lesson about options. How do we buy them? We buy them. Say it goes down, okay? I teach a rule. If your option is going down or your position is going down, you must average down when it's down 40 to 50%. Now, real quick, if it's going down and you think tech is going to fall harder, you don't have to buy it until it's at its lowest point. You're still trying to get the best value. Understand that even when you average down, you're still trying to call the bottom when you average down. It shouldn't just be an alarm clock in your mind that says, oh, time to average down, blah, 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 blah. No, you want to get the best value. Why? Because you're spending money. You work hard for this money. You invest it. When your position is beat up, you want to do the best thing for your position. Okay, so how to properly average down? You guys want to asterisk this. Take notes. Ready? If you have less than 7 days, today's what? Thursday. If my option expires July 9th and I am down 40 or 50%, let's say 60%, who cares? Okay. I'm going to average out, meaning I'm going to buy August options. Okay. Now, what do I do with my money? Whatever I put into the position that expires either tomorrow or expires July 9th, I double it. So if I bought $2,000 worth of options, they're in the shitter. They're down 60%. They're worth $800. Who cares what they're worth? I spent $2,000. I'm going to buy out a different position. I'm going to spend $4,000. Okay. The only time you use the same amount of money is when you're buying the same option. For example, I bought Tiger July 16. I have over 2 weeks till they expire. So I could average down buying the same strike. I could average down using the same amount of money. However, if there was only like 5 days till expiration, I would go out till August. I would go out till September and I would use double the money. Okay. So again, there are 2 different scenarios. You buy the same contract with the same strike, same expiration, and you have more than enough time. Then you just double your position. You're in for 5,000, you spend 5,000 more. Okay, if it's down 50% and you're buying the same contract, if you spent 5,000, say you bought 100 contracts, you're going to buy 200. You're spending the same amount. It's down 50%. Now, when you average out, when you go to September or August or October, I mean, I'll tell you what I bought today to give you an example when we get to it. Okay, I'm not there yet. Let me finish this lesson. But when you average out, so whatever you buy, something's beat up. Fisker got beat up today, okay? So Fisker got beat up, and I'll explain why your stocks got beat up today. But Fisker got beat up today. If I want to average out, I will go to August because I think Fisker will be $24, $25 by August. So I look at what the strike is now. It's like, what, $18, something around there. So I'll buy an $18 strike for August. If I spent $9,000 this morning, which I did, I will spend $18,000 on my August calls. So let's say I get a little bump tomorrow and I sell and I'm down 40%. By the time my August calls roll around, if I'm up like 60%, you combine them. So down 40, up 60, I made net 20%. Okay? You understand there must be a proper way to average down because you can't just give up on your short-term position. All right? But again, I have rules about options. So here are the rules. Ready? We don't buy before 10:30. I think it was episode 47. I spoke about that. I spoke about it for like a good 10 minutes. Why we don't buy before 10:30? Because the spreads are too wide. Meaning the bid is over here, the ask is over here, the volatility of your stock is going crazy. So we do not put in bids or asks before 10:30. The only reason we would is if there's a spike in our stock and we sell it for max profit. Okay. Other than that, you wait until 10:30. All right. You're also trying to call the bottom. And then we also want to get it on sale. So the stock is going down. All right. Let's say Tiger's off 6%. You say to yourself, okay, if Tiger's off 8%, I will execute my order. So you plan ahead. Now I'm using that as an example because that's what happened to me today. So it got down 8%. Boom, executed my order. What happened? Tiger dropped to 10%. So right there, I started out down, 20, 25%. I don't know, something ridiculous. Point is, right? Less risk. If you're buying and you're trying to call the bottom, even when you're averaging down, the point is it can only drop so much. All right. I am going to talk about my positions today, but you must average down the right way if you want to be a successful trader. So that's the whole thing. You must give yourself more time. Now, I spoke about this on episode 37, but anybody that was in a beat up position today will just tell you what not to do and how you can blow up your account. Okay. I haven't done a video like that yet. Number one trade could blow up your account. All right. Number two, if you're too smart for your own good, you can blow up your account. Meaning you're like, oh, I see the direction changing. I'm going to go all in. Okay. You could easily blow up your account. You're putting all of your money into one position. Blow up your account. You don't have enough time. Say your position expires tomorrow or even next Friday. You could blow up your account that way. Let's see. I go out Friday morning. Here's an easy way to blow up your account. I'll tell you how I did it because I'm transparent as an MF, right? And I'm going to show you in my slides how I'm transparent because I lost money on Friday. I lost like $6 or $7 or maybe even $8,000 on Friday because I came on pre-market. I did a pre-market video. I said the Dow was going to be strong on Friday, right? This just happened. And I said Nasdaq's going to be weak and anything with 4 letters will be weak. And then what did I do? I broke my rule and I put in a pre-market bid. So I bought plug options, right? Then it went down. So at 9:39, I bought more plug options. Then it went down more. At 9:50, I bought more plug options. By 10:16, not even 10:30 in the morning when you were supposed to buy the options, by 10:16, I was down $6,500 in plug options, and I had over like 233 contracts. I'm going to show you because I'm transparent. I'm going to show you my P&L today. People don't believe that my rules work. My rules work. You must trust the process. So one of the reasons I came on here is say, if you have enough time, you have at least 2 weeks on your options. I don't care if it's Delta, Carnival, NEO, NNOX, AI, whatever option you are in that is beat up, okay? If you have at least 2 weeks, you're okay. Today was a tough day. I'm going to explain that real quick. What happened in the market today, okay? It's the first day of the second quarter. So the last day of the first quarter was yesterday. So institutions want to have certain stocks on their books. When they close the quarter, they send out this paperwork to everybody, probably an email now, that tells you what positions they have. So this fund has X, Y, and Z stock. So it's as the end of yesterday. So today is a new day. So yeah, they weren't eager to buy into anything. So a lot of people took profit. There was a huge sell-off in a lot of these stocks that had been extremely profitable. And I'll use Tiger for an example, because Tiger went from $9 to $12 to $15 to $17 to $21 to $29. Of course, there's going to be a pullback. Of course, there's going to be a little lower level, but I'm not worried about Tiger. Tiger's going to bump above $29 tomorrow. As soon as the Nasdaq's strong and probably even more. All right. So let's say the COVID cases get worse in the UK and there's more lockdowns. Where are we all going to turn? back to tech. All right. There's like a rotation going on. It's out of tech. And here's a good tracker for you. You guys know I mentioned trackers as lessons. Here's a good tracker for tech. Roku, ROKU. Strong as an ox lately, okay? All the way from 320, probably went as high as 470 or something like that. It sold off today. I don't know how much it sold off. I'm going to check. I didn't buy any Roku options, but that's a good ticker because that's going to be strong. That's going to go above 500. Oh, I've got hot water today so I don't lose my voice. That's good. All right, so let me get back to hopefully you guys got that list. Let me go back to the purchases that I made today, okay? So I explained the first quarter. It's a tough, anything you saw today and your stocks are beating up, it's a hiccup. So if you have 2 weeks or 3 weeks or a month or 2 months, you're going to be fine. You have to zoom out. Remember my lesson, zoom out? I don't teach any lessons about playing dead, but I do teach a lesson about zooming out. So my purchases for today. And again, not all of these are alerts to my platform. I tell my platform members the best trades that I made from today. So I'll tell you the difference between my purchases and what the platform members, I advise them that I traded because I traded all this stuff. But here's what I did. I bought around 1 or 2 o'clock and I said I had about 74% of my cash on the side. I had a lot of cash on the side, okay? So I went in longer term. I bought August options, August for these tech stocks. Why did I buy August? Because I'm not sure tech's going to turn around in the next week, but I am sure by a month from now or 2 months from now, tech's going to be strong. We're at all-time highs for tech. So I'm not worried about a day-to-day. But okay, so long-term plays. I'm going to tell you, I'll spell it out for you as well. DDOG, DDOG. It's a networking. It's like NET, like Cloudflare. AI. I love AI. Somebody asked me about averaging down on AI. Yes, I love AI. So AI long-term. NNOX, NNOX. I also bought Plug. All these were August options. None of these were alerts to my team. I also bought DDD because I think DDD will be strong. I can see it bouncing way above 40, probably to 48. And I bought Apple. Apple calls for, I think, January. I went really far out because I think Apple could be closing in on 200 by then. Now, what did I alert you? Tiger. All right, because I mentioned on bad days, Tiger gets beat up 6, 7, 8, 10. We saw Tiger drop 18% last week. What happened after it dropped 18%? I think it went up 5% and then 12% the next day. So we crushed it because we enter at the bottom. Again, I missed the bottom, and any lifetime members know you use that min entry on the spreadsheet to correct that. Every time you miss your entry point and you're down 18, 20%, you think about it. Psychology trading, and you fix that. Okay, so I alerted to Tiger. I really like Tiger. I was going to alert to DDOG, but nobody had any money left because everybody was averaging down. So if you have money on the side or you don't know who I am and you're just watching this, there is strong demand for DDOG, but you need the NASDAQ to be strong. So where the NASDAQ bounced around today, plus minus, up 20 points, down 20 points, when the NASDAQ has a plus 100-point day, DDOG is going to pop. I think DDOG might go to like 120. It is on my spreadsheet for stock. I believe I still own stock in that. Okay, what else did I play? Dow plays. Carnival. When Carnival was so beat up, I went out to January. I went out to October. I already have October's, but I bought more. And when I say I bought more, I mean I loaded up. Then I mentioned Delta. Now, when Delta was beat up, it was $43.77. And I tweeted that I'm buying more Delta. I'm buying a lot of Delta, over 200 contracts. I like Delta. It looks good. And it just retracted. It went to, this morning, it was $44.40. And I was like, shit, I missed Delta. I told you guys for 2 days, I use Boeing as my tracker, right? And when I see Boeing and the Dow recovering, I'm like, I need to be in my airline stock again. I wasn't in it. So I'm like, shit, I missed it. So I'm watching Delta. And when it retraced all the way to 43.77, boom, my order got executed. I'm currently up like 16 or 17%, but I tweeted it out, okay? So then if you missed it, because one of my option rules is you must get a better price than Matt. So if you missed it, here's the great news. Around 2:20 p.m., guess what happened to Delta? It went lower than when I bought it. So if you put in for the same bid or even a little cheaper, you got your Delta contracts cheaper and you're up probably like 20%. Good job. Okay, what else? STX. STX was beat up, and I do think there's a short. Now, let me explain XTX to you. It's a recovery play. So on tough market days, and you have to look at the competition. The competition is Micron, MU. Okay, Jim Cramer comes out. He says Micron. He likes Micron. Then they come out and they crush earnings, okay? First of all, I hate Jim Cramer. That's why I'd never be a Micron. They crush earnings. They come out and they say demand is stronger, and the price of microchips is going up. It's still high. So that's a good thing. What happens? Wall Street sells off MU. They sell off 5 to 6%. First off, Jim Cramer's an idiot, okay? Let's just simplify that right here. How many of you did he put in Torch? He put you guys in Torch. Torch was like $10. Now the equivalent, you did a 2-for-1 reverse split. So Torch is like what, $3.48? Oh my God, he totally went like this to you. So the point is, anyway, that's my play. It wasn't Torch. STX. It's a chip company. I see the demand. As soon as they have volume, it's going to spike, and it's going to spike like Sorrentino Therapeutic. I see it building. I told you guys, like a volcano. So the first day that somebody actually buys 300 or 400,000 shares, it's not even a lot because the volume is so damn low. So when you see it spike to 88 and then it goes to 86.55 and someone's selling heavily, a short probably, okay, it's okay. There's just no volume. Somebody will buy it up tomorrow. It's probably going to cross 88 tomorrow. I was looking for 89. I'm upset. Micron crushed earnings. Again, this is why we don't hold through earnings. Micron crushed earnings, and they sent the stock down 6%. Imagine if you were in Micron options. I was like, yeah, they're going to crush earnings. Like Jim Cramer said, that's why we don't hold through earnings. The stupidest thing ever is to hold through earnings. Okay, so I also mentioned XL. I averaged down XL. I mentioned it too soon today. It was like 808, 809. I averaged down, and then it went to like 790 or 790 something, and then it bounced back probably like to 804, 808. The point is, I do like XL. Same with Sorrentino Therapeutics. I mentioned those two together for like Tuesday's episode, probably Wednesday's episode. Watch them. Episode 51, 50. All my episodes are good. If you really want to be a better trader and you're just watching me, you should go back and watch the ones that I suggest. I'm not steering you the wrong way. Very tough what I do. All right, let's get to some slides real quick, and then I'll answer some questions. Slides. Okay, so here it is, transparency. I'm going to leave this for a minute. It's my P&L, all right, for the last month, for June. I'll start posting these every month. I don't care. I want to show you my rules work. The reason I left that one position up is because somebody in my family mentioned it the other day that this company who does gene editing, right, is having an offering of $450 million, and the stock should go down. I didn't know what they did at the time, so I bought puts. I lost like 20 grand. I lost 10,000 in this account or 9,000 in this account, and I lost 11,000 in another account. I sold this one today I was down $9,200. The point is, you can see it. You can see what I'm down. All right. I show you. I've had good days. I had bad days. One day I lost 18 grand. Imagine that. That's why you have to trust the process. If you trust the process, you average down the right way and you do the right things and you're correct about the stock. You must be correct about the stock. If I don't know your stock and you're like, hey, what about this? And it keeps going down and down. People are like, buy the dip, buy the dip. I can't help you. All right. Next slide, please. All right. This dude. I think this is a 1 month return since he became a member, which is awesome. See, there's proof right there. 496% in 1 month. My rules work. My lessons work. My alerts are pretty damn accurate. Thank you so much. Next slide. I ask you people to share this so I can share it. This is me. Oh, yeah. I was just saying pre-market, Jim Cramer liked this. MU was taking a dump on itself. I did sell my STX towards the beginning of the market because I knew MU took a dump on itself, and they are related, just like Canadian Solar and First Solar. But what did I do? I bought back in too soon. It was like 11 o'clock. I repurchased my STX position because I thought it was going to pop again. When I think something's going to pop, it doesn't mean I can't sell for profit and repurchase. I did that the other day as well. We do it step and repeat. You secure profit, you re-enter. So I probably saved myself like $7,000. I mean, it would have been a bad day if I hadn't done that and I just drove it down, I would have been down 7,000 more. I mean, that would have been crazy. All right, next slide, please. Point is, you can't do that. You could sell, you could buy back. All right, so I mentioned the diversity of the people that follow me. Okay, so this person joined my platform, used a virtual credit card because I had such few followers, they thought it was a scam. Now they're a lifetime member and they're recouping losses they had for 2 months. Okay, thank you so much for that. Next one. And I ask you people to retweet this because we're trying to grow the family. We're trying to blow this up. All right, Sam wrote, before Matt, I was trading blindfolded. All right, which just means he was throwing darts at it. You know, this looks good. He bought in, it went down. He sold scared. I see patterns. Yeah, I'm not like the other gurus. I want to help you. My rules help. Yeah, okay, excellent. I don't know. Let's go to the next slide. I liked it. I just appreciate Sam. I appreciate everybody that goes out on the limb and tries to support my platform. So please hit the like button, subscribe. If you like the video, you like the content, you learned from the lesson that I taught earlier in this video, please share it with somebody. Be like, bro, you want to learn options? He talks about options. He simplifies it. Watch episode 37. All right. Watch episode 3. I have an options video. Hit the like button. Okay. Did I read this one? So I'm live every day at 4:30. I give you market updates. I tell you what I see in the market and what I expect. Oh, so let's talk about the market real quick. Why didn't tech go up higher? Because the dollar is spiking a little. If the dollar wasn't spiking, it makes it cheaper for people to invest in our market. So there are two things you're looking out for. The dollar maintains, or if the dollar goes down, it's cheaper to invest in the market. And number two, if the 10-year or if inflation stays down around 147, 148, that's good. Okay. Those two things, the market will be strong. So yes, $3.49 a week, cost you $14 a month. I'm like Netflix, except for I make you money. All right, next slide, please. Okay, this dude, he was ex-army or ex-military, I'll say. All right, you started your account with $350. Yes, there's no minimum to starting your account. All right, so $350. 3.5 weeks ago, his account value is at $2,300. Just because you followed my rules. Excellent, bro. Excellent. See, I love things like this. When I take these, I don't know what they say. I know they're good because that's what people send out about me because it's legit. Again, we have a 99% retention ratio. When you join my platform, you like what it is. We built a community. We help each other. You have questions. You don't know what you're doing. You ask, hey, what would I do? And someone will say, hey, Matt has rules about that. Here's the proper way to average down. Again, everybody knows the rules. They're posted on the website. All right. I tweeted them out to public Twitter today and to private Twitter. All right. Next slide, please. All right. There's some guy. Oh, no, this guy's awesome, Matt. $349 a week. Everything he does, no garbage. Excellent. I love that. You're killing it. Awesome. And there are other comments there, too, that people commented. Matt does it something. I don't know. I think they're positive comments. All right. Next slide, please. I appreciate you guys being here. Okay. This one guy. This guy, I tweeted this myself because he sent me it on the side. I'm like, please share. And his account is private, so he can't share. But basically, he says, do I realize how many lives I changed? The answer is yes. And I'm not touting myself. I'm not like conceited about it. What I am is I understand that what I'm saying and what I'm teaching makes a difference. And there are like 30 million new traders out there. So please pay this forward. If you like this video, share it with people. Tell people about it. Okay, 30 million people. All right, so yeah, saving lives, helping lives, changing lives. Okay, 349 family, you're in a better place right now. Your first full month, you made $24,000. Okay, do the math, everybody. He paid me $14. Okay, and he made $24,000. Actually, he's a lifetime member, so he paid me $800. We don't do lifetime members anymore because I'm way too busy. Point is, he paid me $800. He made $2,400. $24,000. Not that you guys can't trade before me, but I can improve your efficiency. All right, next slide. It's all about efficiency. If I save you 5% on the way in and 10% on the way out, every freaking trade, that's 15%. Instead of making 20, you're making 35. Instead of 50, you're making 65. Okay, Fisker, I mentioned that. I put in a bid this morning. I broke the rule. I asked for a 33% discount. You know what I did? I got the options. And then I averaged down too early. And I bought out of the money. So when Fisker dropped, I think I was down like 70%. All right, so what did I do? I spent triple the money. I didn't spend double the money. I spent triple the money, and I bought some August Fisker calls. I mentioned that earlier. Now, that's why I save money on the side for days like today for my certain stocks. Now, these are really strong stocks. The reason they sold off is because we're in quarter three. We're the first day of quarter three, and people are securing profit for other entries. It doesn't mean there's no demand there anymore. It meant everybody has other ideas of what they want to do with their money. So I'm transparent. Here it is. I'm in a losing position. I average down the right way. I'm going to be a winner. Next slide, please. I hope it goes up tomorrow. Be nice to make some money back. Yeah, here's my purchase. I show you guys when I did it. I paid 44 cents. I think these same contracts are like 14 cents or 13 cents now. Pretty bad. They suck. Why don't I average down? Because I speak about my lessons. If something is 14 cents or 13 cents or 12 cents, it's probably a piece of shit. It's probably going to be worthless. So yes, even I make bad trades. The good thing is if I average down correctly, I might lose $4,400 here. But on the other side, I'm going to make like $6,000 or $8,000. Net gain. That's what I'm teaching you guys to do. Next slide, please. Oh, okay, here it is. This is the tweet from yesterday even. Tweet from yesterday, private platform. Here it is. Sorrentino Therapeutic, old friends. I mentioned it for 2 days. I hadn't entered into a position, but inflow is light today. And I said, you know what? It's going to pop soon. Probably not today, but soon. Well, what's tomorrow? So I looked for my best entry for the July 16 options. It was $9.66. Where is it now? $11, right? $11 a day later. So if you watch my videos, episode 2 straight days, that's the stock I was giving an example. I showed you when demand. Next day it has demand. So if you want to see it, look at it should be there. Look at the 1 month chart, right? Oh, it's not there. Sorry. Next slide, please. Look at the 1 month chart. It shows you demand. Okay, this is Delta. So again, I mentioned it this morning. I said I missed getting into Delta. I'm such a sucker. I missed getting into Delta. I told you guys, when Boeing looks good, the airlines will recover. Boom, Delta popped. I missed getting in. So I said to myself, when Delta comes back, if it does, I want in. So I named a price for myself. I was like $43, around 75 cents. It went to $43.75, then $43.77. I executed my order. I'm in. I think it's over 44 now. I'm profitable by like 10, 12, 14%. It's all about choosing the best entry. If I chased this morning at 44.41, right? Say I chased and it's still at $41 and like 10 cents now. What does that mean? It means I'm probably down like 15%. Even though I like Delta, I would be down. It's all about entry and having a strategy. Next slide, please. Got to have some more of this hot water. Tiger. I loaded up on options for my personal account when it was at $28.15. What did I do? I bought a shitload more when I was down to $2.60. It was $3.80, $3.90. I paid $3.90. I bought about 20 contracts. When it dropped heavily off 39, 40%, I went and I tweeted, all right, I'm all in. It was what, $26.24. 26.24 and under. I'm all in. I bought options. I think it closed at like $26.30 something cents. So I'm up like maybe 12 cents. It doesn't do much to my options contract. But when this stock moves the next time the NASDAQ is green, maybe tomorrow, maybe Monday, I do see demand for this. And I think the stock will be north of like $40, $45 in a couple months. But what am I seeing short term? $32 by the end of next week, maybe $35 the following week. I like this stock. So anytime they sell off heavily, now when they sell this stock, it's always heavy. It's always heavy. So again, transparency, jumped in too soon, but I bought a shit ton of options. I think I spent about $39,000 later in the day. I spent a total of $284,000 on all those options I bought. So if you missed earlier, go back. I mentioned all these option plays, and I didn't alert them. They're not alerts, but they're stocks I like. NNOX, Carnival, Delta, there are a bunch. Plug, I'm back in. STX, I'm back in. XL, I'm in. All right, next slide, please. I'm just trying to share through transparency. If you missed it, though, go back. All right, so here it is. I also never want to leave bag holders behind. So I said, I just sold my position on that spike. Again, it can go higher. Unlike other groups who are like, yeah, see the top of the spike? That's when we all exited. How many of you are in trading groups where they show you a chart and it's the top and they're like, that's when we exited? What bullshit is that? No one calls the top perfectly. So yes, I was happy with my profit. I think I made 68%. Love, of course, made 102%. She's a family member. She just gets better entries than me and better exits. Next slide. It's truth. Now, as people say, Love, how do you do it? She says, every stock that Matt talks about, I put it on my watch list. If Matt talks about a position and he's beat up in it and he's down 25%, I will take a first position. So she'll buy in. If it goes down more, she'll double down the right way, episode 37. Then when it pops and I'm up like 22%, she's killing it. She's up 64, 74, 84%. I love showing her examples. She is such a great member to this family. Okay, so I haven't spoke about it yet, right? My platform, 349trading.com. I charge $3.49 a week. I give you updates on the market. I tell you news when it breaks. I tell you what stocks I see that have demand. And how do I track demands? I use simple things. The 1 month, the 5-day chart, I'll tell you direction. I'll tell you when it's going to pop. I tell you there has to be inflow and volume. So generally, you'll see the volume on the 1 month. It's like a Sarantino Therapeutic. As soon as there's volume, and I mentioned it for 2 days straight, it would pop. Today we had the volume. Boom, there it was. And the great thing is I was watching because I had a position and I was going to enter another position and I saw the pop and I alerted the family. I alerted the 349 family. So you become a member of my platform. You go to my website. You sign up. You pay $349 a week. It is continuous unless you cancel it. It clicks one button to cancel it. Now, when you're there, you go to the play-by-play. It tells you how to access private Twitter. There are directions to follow. You have to send an email to support. I'm only saying it now because the platform is growing. And if people aren't following the instructions, they're like, I miss his alerts. I miss everything he's saying. Yes, we are building a new platform out. Anyway, let's get to some questions. I did the slides. Please go back, watch from the beginning. Ed, thank you so much. All right, you're a new member this week. You have $25, $42 calls, $40 TC sale. You're up 2,400. Yes. Okay. So thank you. Thank you for the $5 tip. You're a new member this week and you're up $2,400 and you have paid me $3.49. Excellent. I so appreciate you sharing because this is standard. Now, not everybody has thousands of dollars to buy these options, but we have people in our platform that started trading with under $100 that are up north of what was Romeo at $9,000. I mentioned it before and I keep mentioning because he's smart. Love, who blew up her account down to $854. I mention her all the time. She's north of like $50,000. My small account challenge, okay? I took $2,000. I went down to $1,500. I took it up to $51,000, okay? My rules, my lessons, my alerts, they work. You guys get a better entry than me. Unlike other gurus, I tell you, hey, I'm in. What happens? 10-minute rule. 10 minutes after I go in, something falls off a face. If something's even more beat up, like Tiger was just beat up. I knew it was going to rebound today, but say it's beat up. You wait till like the end of the day. You get the best entry and you're like, boom, I'm in. I'm up 15 minutes in. You're up 15%. All right, next slide, please. Oh, hot out. Humid today. Hey, 349 family. Matt, can I explain what's going on with Iman? Okay, so yes, let me check it out for you. So yes, please ask any questions about any stocks. That's what we do for the next like 30 minutes, okay? So Iman, which is on my spreadsheet, I think I have a price target of $5 and change. Extremely low volume. That's it. People were taking profit when it spiked from 290 all the way up to 415. People have been taking profit ever since, which is June 18th. There's such low volume. So what's going to happen? There's going to be a news or catalyst, and the next time it spikes, you know to sell it, okay? Even though my price target is $5 and change on my spreadsheet, the next time this spikes to $4.27, you sell because you know that they're probably going to sell off. That is what I'm going to do. Transparency doesn't mean I'm adjusting my price target. It means the next time I see it pop, I'm going to sell. All right, next question, please. All right, jobs report coming out Friday. Thoughts on the NASDAQ, S&P, and Dow. Okay, jobs report. I watched something this morning. There was actually a jobs report or unemployment claims this morning, and they were talking about revising the numbers, and these numbers fell. No, that doesn't really matter. Here's what matters, okay? For the NASDAQ, the 10-year rate, which basically tracks inflation. Right now, it's like 147, 148, something like that. Anything under 150 is pretty decent. If there's a spike to like 155, you will see tech sell off. If you're in a 4-letter stock and you see the 10-year spike. The other thing is the dollar. So gold is on the way down. It's at its worst month yet. The dollar is firming up, which means it's more expensive for people to invest in our market. So with a dollar going up, it actually affects the NASDAQ and the Dow. I think the S&P is like an all-time high. So there are certain stocks that lead the way. So when your stock is struggling, it's probably because they don't have earnings. A lot of stocks that are struggling these days are more, questionable. They don't have the earnings that they have. That's why I can't understand STX because AMD went up, right? AMD went up. Micron came out. NVIDIA is off the chart, all right? And then I go into the one that's beat up, and it's still going to turn around, STX. I know it is. I got 7 more days. I got tomorrow for another contract, and I got 2 more weeks for my other contract. All right, next question, please. All right, my thoughts on XL and Tiger. Let me look at the chart for you. So I didn't actually look at the chart of Tiger, but I just knew that I know when Tiger's beat up, it goes down anywhere from 8 to 18%. All right, so today, second straight outflow day. Now, the last time we had, look at the 1-month chart, TIGR. The last time we had this exact pattern, which I showed my followers earlier today, was June 18th and 19th, okay? Look after June 17th. You have 2 outflow days. The volume looks almost identical. It bottomed, and then we had 3 straight inflow days where it went up over 10%, over 12%. So, yes, I expect it to go up 12%, which would be 56, would be like $3. I expect it over $29, either tomorrow or Monday. Easily over $29. Snapshot it. I love doing that shit. Snapshot it. All right, Tiger, over $29, either sometime tomorrow or on Monday. I'm going to look at XL right now, okay? You always follow patterns. That makes it so easy. And outflow versus inflow tells you if the stock's going up because there's demand or down because there's no demand and there's outflow, okay? Let's look at XL real quick. There's probably such light volume today. Okay, yeah. So the last time we had a green day, which I called out, was June 24th, and it popped. And then it even popped a little harder. And then we've had 4 straight days of very small volume. The first day was actually inflow, so people were still buying on June like 26th, and then we had 3 straight days of outflow. Such little demand, such little volume though. So the same, XL, I expect it to pop. If we get any volume, like the average volume for XL is like 8 million, I believe. Let me see. It did 3 million today. 7.96 is the average daily volume. It did today, what did I just say? Like 2 million, 3 million, 3.3 million. So it usually does like 200% of that, okay, or 180% of that. Point is, when volume is down for any stock, here's a lesson. When volume is down for any stock, it's easy to be manipulated. So when I talked about STX and how it was bipolar, yes, I compared a stock with a human personality. Bipolar, because it wanted to go up, then it wanted to drop, then it wanted to go up, then it wanted to drop. You have someone that was buying and supporting a position, but somebody else was selling into it. There is a short at play. I thought he might get up, but because Micron took a dive, it makes sense that there was a short today. So again, I think they'll be gone. Usually takes 1-2 days. So yeah, maybe I'll have to buy some more options for July 9th and then for July 16th. Next question. Yes, XL is going to pop, and Tiger is just a good one when Tiger come back. Okay, stocks we haven't spoken about in a while. What do I think of TYME? Or time to jump back in. Okay, good question. Yeah, because they spiked TYME. So let's see. I know what it is. Again, okay, so it had a huge inflow on June 25th, okay? But people are, I guess, wary of this stock. So then it had 4 straight days of just such little volume. Today, 1 million. I'm going to guess that the average volume's got to be at least double that. Yeah, 2.88 million, so close to 3 million. So it did a third of the volume. That's what I mentioned with STX today. Again, a third of its average volume. If your stock is doing a third of its average volume, it can go up. It could go up a lot or down a lot. The point is, it's easily manipulated. If there's a rush for your stock, okay, here's a good lesson. If your stock pumps up a lot, right, and it's light volume, it's telling you that there's not real demand. So I mentioned one day a long time ago with SPI Energy. It pumped up and I've been like, I'm selling it. And people said, why are you selling it? It's up like 7%. I said, because volume is so light that it's likely that tomorrow will go down. Oh, let's talk about TRIT. TRIT, yesterday it pumped to $7. What did I send out 12 minutes before the market closed? I said, if you're in TRIT, secure profit, get out. Yes, it had good demand yesterday. It was like 1.4 million, but on average, it does about like 300 to 600,000. I'm going to look it up right now. TRIT. 380,000 today, which is what I told you. It did 1.4 million yesterday. I said if it goes back to 300,000, it's going to go down. What happened today? It fell 41 cents, 5.89%. So if you're in options, I just saved you 50% on your trade. If you're in stock, I just saved you 5.89%. And then what could you have done? I said, if I sold yesterday, what would I do today? I would buy back in on the best dip. Okay, so the best dip was 646. Let's see, if it happened around 1 or 2 o'clock, it would make sense. I did not buy in today. It happened around noon. It had a good dip. It also had a dip around 1 p.m. The point is, I gave you the strategy. I told you yesterday, sell it, secure profit, re-enter. It's going to dip tomorrow. All right, let's look at AS. Oh, that's one we used to have. Then we sold when it spiked that one day. What do we make? We made 43% on that one. So I haven't been in that stock for a while. I don't even have it on my watch list anymore. Let's see where it's at. Oh, it's $295. We definitely got a lot more than $295. Didn't we get like $4 and like 30 cents, $4.29? So it's $293 now. It had a good volume day a bunch of days ago on 625. 3 states selling all days. No, I don't like it. Even when it had its good volume day on June 25th, it didn't really move up that much. It should have spiked a lot harder. So no, I wouldn't be in ASXC. I probably got out of the stock because I can't see those letters together. It's like I'm tongue-tied. Yeah, that's why I'm not a rapper. You guys have figured that out. All right, next question. Okay, thoughts for the coming week. Yeah, so here's the stock, the gene editing stock, where someone mentioned we should take a short position. I didn't do my research. When you don't do your due diligence, you feel the pain. So yes, I lost like $20,000, okay? Now keep in mind, the options account I was trading with prior to today had about 71,000 in it, okay? So 71,000, lost 20, back to 51,000. I lost like 3 today, I think. So I'm at like 48,000 for those combined. But I did put in probably like 240 something thousand today. I bought a shit ton of options. I mentioned it earlier in this video. I tell you what stocks I'm in. I bought out till August. It doesn't mean I'm holding till August, but it means I'm holding for a good move. Like AI, what's that around? Like $62, $63. When it reaches 74 to 76, I will sell. Now, long term, I still think AI is going to 114 by the end of the year. So NTLA, this is what we got involved. Gene editing, it pumped to 200. All right. People that bought puts early like me lost money. All right. People that waited till it went to 200 or 195. I showed the slides yesterday. Same strategy, different entry points. Love made 30%. She sold this morning. I'm assuming she probably made a little more. So let's look at the stock. I know there was demand again. Oh, so here's the thing. They're coming out with their offering. They're offering at $145. I'm assuming somebody will eat it up because the stock's got to be north of that. But if it doesn't, the stock could definitely still take a header. It could take a header, but there was inflow again today. It went up $9 or 6%. I remember looking at the day chart. It didn't even look weak. The day chart didn't even look weak. Wait, it popped again? No, it didn't pop that high today. Yeah, I mean, the chart looks strong, unfortunately, because they have an offering and they're going to close on it tomorrow. Now, what I was hoping is they come on and they say something like, nobody bought the stock and we're going to reduce the price. So, yeah, our puts expire. I already cut my loss. I'm sorry, Tony, if you didn't know that. And I guess the other question was related, what do I think for next week? I mean, honestly, if I didn't have a position in this, I probably would have jumped on board the bandwagon yesterday, like in the reverse direction, because it's strong. I don't understand. And again, they did the same thing with NEO. They did it with QS at some point, and then it sold off. So do not be surprised if they sold off. Again, the options expire July 16th. The point is, when you follow my options rules in or at the money, when the people bought higher strike options for puts, 185, 180, 170, and they made money and they sold today, it's because they were in or at the money. When I bought my put at 130 or 135 and it spiked to 153, right? I wasn't in the money anymore. So that's why I didn't lose all that much value, but I certainly wasn't in the money and I certainly went through good money after bad money. Okay. So Tony, please be smart about this. I closed them out, man. I would watch. I closed it out. You saw, I thought it spiked down today like 154. Yeah, 154. That's when I was there. It was 155, and I said, I don't know how much lower it's going. Let me just get out and limit my loss. So I sold my other position, and again, I lost like 9,200. I was down over 10,000 on that. So I made back like $800. Not a killing, but it's planning ahead. It's knowing how to secure, what money I could. You don't want your options to expire worthless. If those Fisker $19 calls, if I don't get a pop by like 11 o'clock tomorrow, I'll sell them for like a nickel each. I want that pop. If something tells me it could turn around and the stock could spike $1, then I'll hold it. I'll take the risk. Risk first reward. Everything we do is risk first reward. All right, next question, my friend. All right, Matt, what do I think about this one? I don't even know what it is. So I love when you guys mention stocks. I mentioned this before. I love when I don't know what the stock is because I can look at the chart and tell you. A firm holding. Okay, so I look at the 5-day chart because it tells me the 5-day chart is up 3% over the week, and the chart looks pretty decent. Now, the great news about this AFRM is it dips heavily. So you had 1, 2, 3, 4 chances to get in. If you like this stock and you are following it, you just want to know how it looks going forward. You had 4 great opportunities to buy a major sale this week with this stock. So if you got in there, you probably are up over 3%. And if you're in the options world and you're up like 6%, you're probably up like 50% on your options. So let's look at the 1-month chart. Oh, beautiful 1-month chart. This is a really nice looking chart. I don't know what they do. Let me look at volume because they did 2 million today. They do about average. That's good. I'm going to add this to my watch list. That's a nice stock, Mimi. Yeah, the chart looks great. I wish you brought it up maybe like a day ago. I would have easily took a 1.5% gain today. Let's see how high I can go. Let's look at the 3-month chart. Okay, it can go up another $9 at least. So it's $68. If it goes up another 9 to 77, that would be what, like another 15, 16% gain. If it happens within a week or two, you could probably make 100% return on your options. So yes, I like it. Next stock. Hopefully you guys are learning and seeing what I see. Question. If I have calls expiring tomorrow and you are down, do I sell them for the current price to recover some money, or do you never let a contract expire worthless? So I just mentioned if you have the Fisker $19 calls, what you'll do is you'll either make a decision like I'm going to sell at market open for $10 a contract, and you'll suck up your loss of 75%, and you're hoping to make it you're going to double your money, so you're hoping to make at least 40% on the new contracts. If you don't do that, then you could ride it. If your contracts are worth $10 and you say if it spikes, then you have to have a goal. You say to yourself, if Fisker spikes tomorrow, maybe it goes to $19.32. So if my contracts are 10 cents, right now, and it spikes, maybe I can get 3 times my money, 30 something cents, right? So it's risk versus reward. You're risking 10, your return is 3 times as much. I'm probably going to hold. We'll see. I don't like contracts to expire worthless. I'll take the $5 at some point when you know you're going to be wrong about something. Same with the NTLA. When I knew I was going to be wrong about it. And again, I take the credit because I tweeted about it. I said I was doing this. I shared through transparency, even though somebody shared it with me. I didn't do my due diligence. And I mentioned that. I said, I don't know what they do, but they're having an offering. Mathematically, the stock should go down to $94. Mathematically, it should. But, it didn't. All right, I'm not a financial advisor. Yes, do your own due diligence. If you're still watching me, like 200 strong, please click the like button and subscribe. And you must push notifications to find out when I go live. It's every day at 4:30 p.m. If you have questions, do not be shy. Ask your questions. Yeah, hit the like button. Thank you, love. But ask your questions. Don't be on the sideline going, yeah, I've watched you for weeks, dude. No, ask about your positions. Always make predictions. I teach a lesson. Always make predictions. All right, my thoughts on 716 EBON options. Okay, I think I'm in for 72 cents on these, which means my break-even price is $3.22. It spiked the other day to $3.30. I think it's back around $3 or $3.05 right now. So I'm assuming the options are probably worth 55 cents. So probably down at least 22%, I guess. Yeah, I'm holding them. It spiked the other day. I mentioned it, and I even mentioned it on here. When it spiked to 330, I should have had my order planned in ahead. I should have sold, and when it went down, I should have bought back. I only did it for 10 contracts. I only had one account that was pre-planned to sell on the spike. But my majority, my big holding for those options, yeah, I didn't sell them. Yeah, I sold 10 options. I bought them back cheaper. I saved a couple $100. It wasn't much. I like the position. Hopefully you're not heavily levered, meaning we never want to put all of our eggs in one basket. So you have 30 grand, 3,000 is a good position to have in there. And since we buy in 25% increments, if you have 30 grand and you're going to spend 3,000 on whatever position it is, your first buy should be about $750. Then you have to average down. You spend another $750. Then you have to average down, but you go out. All right. Then you spend another $1,500. You're in for $3,000. You won't blow up your account if you're wrong about one trade. If you're wrong about EBON, or you're wrong about N whatever it was, those puts, or if you're wrong about UVXY one day, you lose $3 grand. You lose 10% of your account. You should always have money on the side. Now, right now, that makes me a hypocrite because I just told you guys earlier, I put so much options money into the market today in preparation for what I think is going to happen over the next month or two. I don't think the market's going to throw up itself. Every time the market struggles, it's only certain stocks. Okay, so I find stocks with demand. If you want to know what stocks they are, go back to the beginning. I mentioned at least 8 different positions that I bought into today between 1 and 2 p.m. for options only for August through all the way for January. Apple, I bought January's. All right, next question, please. To save money, I can't afford, 10,000 Apple shares at $140 or $36, whatever it's at. No. So instead, I'll use $30,000 or $40,000 and I'll buy some January calls. And if Apple goes to $180, $190, $200 by then, I'm going to be crushing it on that $40,000. I'll make probably $75. If I were just in the stock and it did that, I'd probably make $24,000. All right. I actually bought 3 Micron options today at the lowest point, thinking it'll bounce. Yeah, the reason I don't like Micron is because, I do need to root for Micron because Micron needs to go up. AMD needs to go up for my SDX to go up. So, yeah, it's not the worst strategy, but I hate everything that Cramer invests in. He talks about a stock. It's like the kiss of death. The stock has great earnings, and they still shoot it down. Yeah, so you're looking for a 40% return. Yeah, you'll probably get a bounce like that tomorrow. Again, I still have my fingers crossed. I know as soon as someone buys into STX, it's going to bounce hard. I hope it happens tomorrow like SRNE happened today. But do I think XL is going to hit 10 by the 16th? Yes, my sell point for XL is going to be $10.10. So I believe 1 or 2 days coming forward. And again, the EV industry, Fisker, CCIV, NIO's been off the chart, right? What was my price target on NIO? So sorry, I changed it. You see, this is what happens when you change your price target. I had a $55 price target on NIO. If I sold NIO today at $55, all my stock, right? Like 400 shares, something like that. If I sold it, I could have bought it back at $50. because that's what it did. It sold off. It went to so when we have price targets, I did the same thing with Party City. When Party City hit 10, I sold it, and then it went down to $8.50. So that's why we have price targets. All right, next question, please. First time you made it live, dude. I'm so happy. I love that people watch the replay. That's first because they want to learn. All right, I love people that watch my other videos, the ones I talk about 3, 8, 14, 17, 37, 42, and 47. Okay, from memory. Anyway. Going to follow the rules from here on. My account is down, oh my God, 98%. All right, the point is you didn't give up your account. The point is you weren't like, let me just let these expire worthless. You saved whatever it is. So if you had, oh God, if you had 10,000, what does that leave you with, like $200? All right, so yes, Love and Romeo blew up their account. You can come back from blowing up your account. I spoke to somebody that had $250,000. They were down to $1,200, and now they're up to 52 or 53,000. It's not a lot. They had $250,000, but they were down to $1,200 6 weeks ago. 6 weeks ago, $1,200 to 51,000. Similar to my account, okay? Similar plays as well. All right, fun. Yes, you can do it. Yeah, follow the rules. Yeah, so the whole point of me talking about the rules earlier in this episode and going over them slowly, if you're not a member of my platform, they're on the website. But the whole point is I don't want you guys blowing up your account. So I went from the rules to how to blow up your account. You overly heavily leverage. You go from one 4-letter stock, the Nasdaq's beaten up, to another 4-letter stock. You're like, oh my God, I'm getting killed in whatever it is. And you get out and then you get into Tiger and Tiger throws up. Or you get out of Futu, which does the same thing as Tiger because Futu went down first and then Tiger threw up. All right. Thoughts on APR going forward, in low on stock and options. Okay. So you're in low. That's the first thing. You need to get in at the best entry. So I think APRE was what, like $4 and something, like 80 cents maybe, APRE. Remember when it spiked a couple weeks ago to $7? And I said, happy birthday, everybody that's here. Get the hell out. So, yeah, a lot of you did. Thank goodness. Again, I sold mine at 561 on its way down. I took 1 or 2% from it. It went all the way down to 420. And then it spiked recently to what, like that day? Oh, did it go up today? Wow, it spiked today. Okay, good for you. Oh, good for you. It spiked. I'm so happy for you. But you see what happens? It spiked and then what? Spiked at 1 o'clock, sold off. It held up pretty strong. Yeah, you might be okay. I mean, unfortunately, they tend to sell this one off, but maybe this one will hold. You know what, though? No, I would sell my options. I got to tell you how light volume was today. It's 5 million, but the day that it spiked heavy to like the last time it spiked, it looked to be like probably like 80 million. So they only had 5 million today. The average is 3 million. I would secure profit. I'd get the hell out, man. Secure profit, get out. Why? Because if there's no volume, when it spikes up, it's going to consolidate, meaning it's going to go down. It's not going to go all the way down, but it's going to go down and find a new level. So please take your profit, bro. Plan ahead. Maybe it spikes up 10, 20 cents tomorrow. You get max value, you're out, and it goes down, and you could re-enter again. All right, next one, please. All right, what do I think about Clove? Oh, God, really? I looked yesterday because I saw I missed a question on Clove because we ended early yesterday. But Clove, I saw yesterday, has such light volume. I almost tweeted for that person. So if it was you, dude, and you're on my platform and you asked, I'm sorry I missed it yesterday. I'm glad someone asked it again. Such light volume. The fact that it was off 7.43% today, right? 99 cents. Its volume was so light. 24 million. I understand that's not peanuts. But compared to other days when it has spiked, it's been much more heavy. So, yeah, I have a feeling this was probably going to go back down unless they start playing with it. When I say they, I mean the Reddit boys. So let's look at the average volume. 58 million, the average volume. Before it got interesting, I bet the average volume was probably sub 8 million. So, yeah, I would get out, dude. Cut your losses. I mean, it could spike. So if you plan ahead and it spikes one day, but if it does spike, understand people will sell it off. So if it spikes, you get out. All right, that happens a lot with XL. That happened with Sorrentino Therapeutic. When it spikes, it's not like I think that it's going down. I thought it was going up even higher. But when it spikes, people tend to sell it off. So I secure profit. All right, let's get a couple more questions here. Oh, I see some stocks I've never seen. STX, do I still think 90 this week? Amy, I don't have my crystal ball. I was surprised it sold off. Again, there is a short at play. So do I see 90 tomorrow? No. Do I see 90 by next Friday? 1,000%. Screenshot it. I mean, I would see 91, 92. Now, the good thing about this is I'm going to buy more positions if I need to. If my options that expire tomorrow are still struggling, I will buy more. Now, remember, I sold them today, but I bought in too soon again. God, if I only waited. This is what I do. Talk about FOMO, because I was like, what if it spikes and I'm not in the options that expire tomorrow, which have the biggest impact? When you buy options that expire the next day, it has the biggest move. So if your stock goes down, you get crushed. If it goes up, you kill it. So I had FOMO. I sold. It went down like 40 or 50 cents. I said to myself, buy. If it spikes hard, and it spiked a little and I was excited, and then it went down even lower. So it needs volume. I think STX has like, what was it? A million something? Let's see how much volume it had today. Point is, it did a third of its normal volume, I believe. It did 1.65 and okay, normally does 3.2 million. So yeah, if you look at the 1 month chart, it's just consolidating. People haven't liked this stock for a while. It will turn around. Volume was light again. So yeah, I'm looking for one good inflow day, which means one institution, when they buy 400,000 shares, which isn't a lot of shares, okay? 400,000 shares is probably like $30-something million. They'd buy it in a few increments, probably over 1 or 2 days. They would buy 10 million, 10 million, 10 million. They might try and do a black pool so we don't know about it, and it doesn't affect the price. Point is, when there's inflow, yeah, I mean, it has earnings. Its PE is 21. Its forward PE is 15. Its earning per share is just under 4. They make microchips. This is what the shortage is. There's huge demand. Microchip pricing is high. I don't know. Explain it to me. Explain that. I guess Wall Street is more interested in oil stocks or airlines right now. I mean, everything's in a cycle. So Micron just sold off. I expect STX to move probably soon. I watch AMD and NVIDIA. Those two are moving higher. So yeah, it'll follow. All right, next question, please. Thoughts on, yeah, I love those, man. I love those. In fact, we might have bought the same ones. I actually think I bought the 25s today. So yeah, I love those options. I love why? Because I mentioned Carnival and I say by October, which I have other options, I think Carnival will be north of $50. So let's just pick a number, $54.75, let's say. That means your options are worth $24.75. You paid $4.75, right? So you're returning at least 400% by like October. Not to mention you bought out, let's say Carnival's like 66 by then. That's such a great long-term investment. And why am I so happy for you? Because I basically did the same thing when I talked about my options today. And I bought Apple out to January. I bought Carnival out to January and October. I bought Delta out to September, October, and January. I bought AI out till August and January. Okay, I bought NNOX out till August and January. I spent a lot of money today. Everything was on sale. I had a spreadsheet. I wrote down my stocks. I wrote down my positions and where I wanted to enter them around 10:30 this morning, thinking if the NASDAQ threw up and the Dow threw up on itself a little more, I would get better entries. And I did. So right there on a better entry, I probably saved 12%. So better entry, 12%, 240,000. I saved what, like 250,000. Yes, please. Anybody new here, if you found me for YouTube or Instagram or Twitter or whatever it is, turn on your notifications. Please like this video. If you're getting content, it's very important to like the video. Everything's algorithms and YouTube's showing me to a lot more people. And the family is growing. And our retention ratio is 99%, 99.2. And you know I love numbers. So I know that's damn good because we don't market. It's all word of mouth. So tell a friend. Tell somebody about what we're doing. Watch my other videos. Spend the 5 hours. Episode 3, 8, all right, 14, 27, 37, 42, 47, and this was on point. Thank you so much, everybody. Have a good evening.